Have a few minutes? You won't believe what you can do with it. Open a Regions checking account online in as little as 5 minutes. Then enjoy award-winning service and banking tools and tech that help you live in the moment. Learn more at regions.com/live in the moment. Regions Bank, member FDIC.
Broadcasting from the Business RadioX studio in Houston, Texas, it's time for Regions Business Radio Houston. Regions Business Radio Houston is presented by Regions Bank. Brave the beginning. Member FDIC.
Hello and welcome to Regions Business Radio Houston, presented by Regions Bank, member FDIC. I'm your host, John Stacy, Market Executive and Head of Regions Houston Commercial Banking Team. We're broadcasting live today from our business radio studio right here in our Houston headquarters. And boy, am I excited for our second season of these podcasts. They've given us 8 episodes. And the first one we're going to do here is franchise lending. And what a great day. I'm thrilled to have with me today a new colleague who recently joined the bank, Janine Germany. Janine comes to Regions with over 25 years experience, which affords her to be a specialist in franchise banking, which is today's topic. We also have our homegrown franchise expert with Chad Cargile. So, wait a minute. Wow. Look who just joined us. Darren Tabron. Darren's is an in-market SBA specialist and will absolutely work with Janine to help build out the franchise business. Darren, thank you for carving out some time. What a great surprise to have you join us today.
Thanks, John. You know I couldn't miss season 2.
I love it. Well, hey, let's get started here. Janine, welcome. Welcome to the podcast. You recently joined Regions to help expand a relatively young franchise group here at the bank. If you could, tell me exactly what is franchise lending?
So thank you, John. Our franchise lending group provides research, expertise, and deep dive analysis to meet the unique needs of small businesses across various franchise sectors. We understand that there's a large market opportunity to drive growth through specialization in franchise concepts, and we are here to help strengthen the relationships with our targeted brands.
And as a follow-up to that, Janine, why does it make sense for Regions Bank to have this line of business?
So our partnership is critical to expand Regions' specialized banking capabilities. We help better position our commercial relationship teams and SBA bankers for success by providing valuable intel on franchise brands and advice throughout the franchise transactions.
You know, often when you start a new job, a new in this case here at Regions Bank, there's some surprises to you, favorable. What's been most surprising to you after joining Regions Bank?
Throughout my hiring process, I really noticed the culture here at Regions. It really grabbed my attention and was important to me. Then coming on board and starting in my role, that just was, completely, the culture was more than I ever could have anticipated. The collaboration, just how welcoming everyone was, and I have recognized that just transcends over to our customers and means so much to me because my skill set, my experience doesn't matter if we can't deliver and provide a good customer experience. So
you used the culture was probably not necessarily surprising to you because you got a good feel for that when you were in the interview process, but you also used the word collaboration. And that's one of the things that we often hear from new associates, true to myself as well, that the collaboration is it's honesty, it's very transparent. You may not always agree on whatever the topic may be, but at the end of it, you do agree to disagree, and you can move forward, and typically that drives results. And so I'm glad to hear you use collaboration because we often hear that people join Regions Bank because of the culture, and that's a big part of it. There's a lot of do the right thing here, take care of our client, let's treat each other with dignity. And so we're just so thrilled to have you here on the team. How do you envision helping us grow? Because you're not just covering Houston. You're based here in Houston. We're so happy about that. But how do you envision helping us build brand awareness with our franchise lending?
So I have an assigned list of franchisors that are my relationship. So I will develop those relationships, foster the relationships to where we're able to get referrals for new franchisees and able to offer them the correct credit products and banking products that we offer here at Regions. So that will include visiting their C-suites, attending conferences that they have at conventions throughout the country. So that's my main goal in helping develop business.
Are there particular brands that you want to target? It could be Jiffy Lube, Kitty Academy, certain brands that you just think really fit with what we want to do?
Yes. So we have 24 targeted brands on our list currently. Now, keep in mind, there is myself and a counterpart. Our team will be built out within the Regions footprint. There will be 5 franchise bankers. So right now that list is 24. I think that will grow over time and as our team is built out. But right now our targeted brands are in the fitness, health industry, automotive repair and parts, beauty, early childhood learning centers, as you mentioned, John, quick service restaurants, maintenance, pet-related, insurance, retail, and some service industry as well. And so, again, hope to see that grow over time.
Is the ideal client, though, a business owner that maybe owns 4 or 5 of those franchises, or 20 or 30, or is there a sweet spot there for you?
Yeah, really 1 to 5. Is our sweet spot. Definitely with this targeted brand, we will help facilitate a startup, a first unit for a franchisee, and help them expand if they do have 5 units and whatnot. So when you get up into that, 20, 30 unit operator, it makes it a little more difficult for franchises that are not on the targeted brand, but on our targeted list, then we definitely can look at those.
So you mentioned the ones we like. We always like to talk about what we like, right? What do we not like? What type of franchises would you say stay away from? Chad, stay away. Darren, stay away.
Yeah, so that's another part of my role, is to help the commercial relationship bankers and the SBA bankers in finding the right franchises that we want to lend to. There's over 8,000 brands, okay? So you can imagine the level of support is just very wide range. We want to stay within those franchise brands that have several units. They've been doing this a while. They provide the adequate support to the franchisee, whether that's marketing, human resource offerings, anything to help them be successful. So we're not here to look at franchises that are just starting. That's not really our sweet spot.
So startup franchises would not be something you want. 2 or 3 years of experience?
We want to see a good amount of units. We want to see, 150 units. That's kind of our targeted list, but that doesn't mean we won't provide a credit product for a franchisee who is looking at a franchise who has less than 150 units. But we really need to do a deep analysis into that brand and make sure that they're providing the adequate support for the franchisee.
Now, when you say units, you mean number of stores, number of schools, number of Jiffy Lubes, whatever it may be.
Yes.
Okay.
Number
I wanted to be
stores.
clear on that,
Yeah.
just in my head.
Right. And it's also number of, you can look at number of stores, and a lot of those may be corporate owned. So it's really how many franchise owned stores do they have as well.
Mm-hmm. We often, we may come across somebody that owns 1 or 2 automotive stores, and they own them outright, and they'll often talk about, well, I want to go get this franchised one day. And, how do we do that? How do we do that process? Do we have that capability to help somebody link in with the franchisors?
We definitely have resources that we can point them to within the franchise industry to help them with that.
Okay, great. Well, Chad, let's switch to you here for a minute. Again, welcome back. It's so fun to do these with you. As you know, we're in a big growth phase here in Houston with our commercial team. And so we've hired a lot of bankers, and so often most of what they're doing is talking to prospects. And so how do you envision the commercial relationship team working with the SBA team, working with Janine in the franchise lending space?
Yeah, John, first of all, it's great to be here for season 2. It's great that we're here again. And yes, so we are in growth mode, and this is a great opportunity for a brand like Regions Bank in the market, particularly in Houston. I think Regions has a very unique model, particularly for Houston. So at Regions, our commercial bankers work locally with business owners to understand their business and their unique needs. Once a need has been identified, the commercial banker would then bring a subject matter expert to advise the business owner. Therefore, if the banker identified a franchise opportunity, they would bring in their franchise expert, which in this case would be Janine Germany, who we're so glad to have you on the team, by the way. And then we would also bring in our SBA advisor, Darren Tabron, to provide advice, guidance, and education, and to help craft a very custom solution for our client. So, John, those are some of the things, the way we would work to bring this team of experts to really augment that commercial banker to help our clients in the Houston market achieve their dreams.
Sure. Do you see that most of the opportunities will be in the smaller business banking community or the larger banking businesses community? Where do you see the
that's
best
a great
opportunity for us?
question. I would say both, John, because the great thing about our model here is that, for a lot of business owners, as they grow, they really outgrow their small community bank. And listen, community banks have a great purpose in our community, but at some point they really outgrow it. They're so used to having just one banker that's trying to be all things to that business owner. But as they grow, their needs become a lot more complex. And that's where we can really come in and really assist, particularly that smaller business owner as they grow. And then as you get to the larger space, they've outgrown the small community bank, but then they're a little bit too small for your larger money, center banks. And so Regions can really come in and offer these really complex solutions and bring in, again, the subject matter experts like Darren on the SBA and Janine from the franchise team.
So you say the commercial banker is out prospecting, meeting with a lot of different companies. They identify what they believe might be an opportunity. And so, Darren, I want to move over to you. Again, I'm just smiling that you were able to carve out your time and join us for this. But I often get asked, John, how do we determine if they're a candidate for an SBA or not?
So there's a couple of ways we can figure that out. In terms of franchising, there is a franchise list that's provided by the SBA. So one thing we have to do is make sure that franchise is on that list. And if it's not on that list, there are certain things we have to do with the SBA to make sure that they're able to add them to that list. So there's certain documentations that has to be done by the client to add that franchise, have to meet a certain criteria. Secondly, we do have a size standards, which is given by the SBA as well. So it's going to be for each industry. It's going to be divided by or determined by if it's the size of the company in terms of NIAC code for the industry, and then it's going to be in terms of employee size or revenue size. So, for example, if you have a client that is in the chemicals, their employee size might be 2,500, right? If they have more than 2,500 employees, they're not eligible to be a part of the SBA program. If it's less than that, then they're able to do so. In terms of revenue size, if the SBA says, hey, the revenue is top line 20 million, if it's over 20 million, we're not able to do them. If it's less than 20 million, they are eligible by SBA. So there's just a little bit of the guidelines for.
Yeah, I think that's important too for everybody to understand that. So what you're saying is that if a company has revenues above 20 million, they're not eligible to go down the SBA lane.
Not all. So it's going to be different for each industry. So It's not just for one fits all.
Okay. Good. So, Janine, you're covering a lot of different geographies. What makes Houston so attractive in your mind? Chad and I and Darren certainly have our own views, but as someone relatively new to the bank, but certainly not to the industry and certainly not to Houston. Why is Houston so attractive in your mind?
Texas is actually the fastest growing state for franchise. And with Houston being the largest city in the state of Texas, this is just ripe for growth and opportunities in the franchise sector.
Often we have a commercial banker, they've identified an opportunity, they brought Darren in perhaps, Chad in perhaps, you perhaps, Janine in. And so now it's, what are typical products, banking products or services that a franchise might use? Of course, we all think checking account, revolving line of credit, maybe they need a construction loan for a new piece of property. What are typical products and services that a franchisee would use?
Your typical franchisee will need a credit product, as you mentioned. 80% of franchisees typically utilize an SBA loan. So some may qualify for a conventional financing product. They also need treasury management. Often that could involve vault services as well. So one unique thing we have here at Regions is we have our wholly owned subsidiary, Ascentium. And Ascentium will help us with our go-to-market strategy with our franchisors, because a lot of these franchisees who have existing units, they may need a brand refresh or renew. And so Ascentium we're able to partner with them, and they can provide a very quick turnaround, same day approval on application, next day funds available to our customer. So they're able to go ahead and do whatever improvements the franchisor is requiring of them. And it may be something just as simple as a new point of sale system. Those can range $20,000 to $25,000, and it's often difficult for a small business owner to find a small loan of that type. And Ascentium can provide that very quickly for them. So that's a product that I'm excited about. Definitely.
Yeah, Ascentium is really going to complement our franchise efforts for sure. The quick turnaround, I think that's such a big differentiator for Regions Bank when we're out talking to prospects and clients. Any typical SBA products that, a particular type loan, I know there's Chad always has to correct me on this. It's the 7 something. It sounds like airline numbers, but there's different numbers there for these loans. Are there particular ones that you see franchisees using a lot of?
Yeah, so for 7A, SBA 7A loan, there's business acquisition. So you have a franchise owner looking to buy or acquire a franchise. An expansion loan, which is going to be them looking to expand to a second location, third location, or a product. So if they have a new product that's going to generate new revenue, that's also considered an expansion as well. Working capital lines.
I want to throw this question out to everybody. The government, the Fed, has been raising rates, and they're doing that to slow the economy down. And when that happens, that can cause stress with small businesses. How do you think, or how are you seeing that, if at all, at this point, impacting franchisees that you work with, small businesses that you may work with? Any thoughts or insight there?
I'll just speak from the franchise side. So a lot of these franchisors have relationships with several different types of banks and SBA lenders. Most of the SBA lenders they have relationships with are lenders who are non-bank lenders who sell in the secondary market. So they're pricing their loans very high. It's an opportunity for franchisees to really consider banks such as Regions, where we don't sell in the secondary market, where we're able to offer that long-term fixed rate pricing at a reasonable rate. And so they just have a lot of better opportunities in having a relationship with Regions to help them grow in a time where we are in a rising rate environment.
Right, because the cost of capital goes up, right? Yeah. And that's more expensive money to try to run their businesses. Chad, did you want to?
Yeah, I would just want to kind of piggyback on what Janine just said, because really right now in an environment like this where it's really unprecedented for, over the last 20 years, right? So now is really the time to really have expert advice, to really help a business owner guide through this kind of climate. And I think that's really another really, good feature of of our bank here is that we do have these subject matter experts, because you really do want to have some really good advice in a rising interest rate environment. I tell you, the conversations, John, I have with my commercial RMs, relationship managers, is, let's bring our SBA banker along, because that really impacts your cash flow when interest rates rise. So a lot of times on the SBA side, we can actually, extend the term. We've got the guarantee, so there's a lot of other things that we can get a little bit more flexible on than we can conventional. So it's really worth the conversation when we sit down with the prospect.
While we're talking about rising rates and the stress that can put on a business, you have some examples of where you've gone in and provided solutions that have helped a small business, a franchise, for example?
John, we do. I'm going to flip this to Darren, but we actually have a very specific client that we worked with, was banking at a larger institution and just really wasn't getting the attention. They weren't really getting a whole lot of solutions. Went to a community bank, and they really didn't understand what they were asking. And Darren was able to craft a unique custom solution for this client. Darren, you want to share a little bit about that client?
Sure. Thanks, Chad. Yes. So this was a chemical manufacturer. One of the biggest issues that they had about maybe 9 to 12 loans that were equipment loans that was financed by non-banks. And Janine stated earlier, those loans were probably around 15% in interest. And they were looking to expand and get a new building because they was currently leasing, but they wasn't eligible to go to a major bank and get it done because it was over leveraged. And to Chad's point, the smaller community banks weren't able to lend a hand. So for us and the SBA, we were able to say, hey, let's roll all of this into one loan. You want to buy a building? We can do that and give you 25 years on that building. Let's look at the useful life of the equipment that you currently have. Let's roll that in, because that was more than 30 years. So we was able to go up to 25 years on all the equipment, do one big loan, and term that out over 25 years. So now we help the customer with additional cash flow.
Not to give away too much of our secret sauce, but we use a kind of a dual coverage model here, where we have in-market, boots on the ground, relationship managers. We bring in then the specialist, Janine Germany in this case. How important is that, Chad, to have the right coverage team covering the market for the franchise business?
It's critical. I mean, you've got to have, today, competition is so intense. Without good advice, guidance, and education with your business owners to bring these subject matter experts in, it's just always hard to navigate all of those barriers or obstacles that you don't know about that may exist that might prevent your business from growing and thriving.
Do you hear feedback from clients or prospects, after you've gone and you've brought out the local coverage team, but then you've brought in a specialist that knows that industry, understands the cycles and the seasonality of that business? Do you often hear feedback?
We do, John. Some of the feedback we receive is, wow, these are the types of conversations we've never had before. Thank you for doing this. I didn't realize that there was this kind of information out there, and that could really help me understand my business better, and then really understand the opportunities to help my business expand and grow.
Janine, would you add anything to that?
Yes, I think the subject matter expert is important, and especially in the franchise space, because these franchisees, often it's their first time being a small business owner. I think it's important to have someone in front of them who has been in SBA lending, small business lending, franchise lending. I have been in banking 35 years. So I'm able to take all of that experience and help them kind of avoid some of those pitfalls that they may not see coming, because this is a new experience for them. I have a very strong construction background. So imagine a new small business owner not only opening up a business for the first time, but also maybe the first time they've ever had to construct something. So it can be a little bit of an overwhelming experience for them. And so just having that level of expertise to help walk them through that, to go over next steps, let them see what's ahead of them, and reassure them that we are here not just to offer that credit product or that banking product, but the expertise to help walk them through that process.
Well, it's just so valuable for that guidance, right? Because you have that background in construction in your example, and I know that that's appreciated by business owners, CFOs, et cetera. Darren, you do such a wonderful job of partnering with our commercial RMs. Would love to get your thoughts on how your experience with the dual coverage model, how you partner with RMs, you go out into the market, and you guys find business.
I think the process of One Regions is amazing. One of the things that we do, we have what we call a SBA comparison tool, where it breaks out the terms and structure of both SBA loans, 7A, 504, also the conventional portion of that loan. So what we do is we go to the client after we spoke and going over each opportunity with the client and say, hey, which one of these options work best for you? Here's the terms, here's the interest of what it would be for an SBA loan. Here's the term of what it would be for a conventional loan. It's in your hands. Here's the structure. You let us know which one works. And I think that has helped a lot because it's one of giving our customers a lot of different options that most banks don't come to the table with. And we've won a lot of business because of that. Even if it's not SBA, it might go conventional. We just had a term sheet that was signed 2 weeks ago because of that process.
I do believe that giving clients, prospects, options is always nice because it's not one size fits all. It's not the flavor of the week. We have different structures that we can offer, which I hear feedback often from owners and CFOs about bringing in our specialty product folks. And so I know that with you, Janine, this is just really going to continue to keep the growth trajectory that Houston has been enjoying over the last couple of years. So any final words of wisdom that you'd like to share with us, Janine? I'll start with you.
Thank you, John. I'm just really excited for the opportunity and for being a part of the Regions team, and just happy to be here and help the growth here in Houston through our franchise credit products.
John, listen, this is a great conversation, and I think it's just a really good opportunity for us as a team to get out on the market and really educate the community of Houston on what our brand really represents in the marketplace.
Darren, close us out with any final comments you might have.
Hey, I'm looking forward to going out in the market and working with Janine and Chad and the rest of the team.
Great. Well, listen, I want to thank you all, Janine, Darren, Chad, for taking your time and spending it just a few minutes here with us to do this podcast and to have this conversation. And I want to thank our listeners to Regions Business Radio Houston, presented by Regions Bank, member of FDIC. Enjoy our episodes anytime by visiting businessradiox.com and selecting the Houston studio, and then click on Regions Business Radio. You can also get this program on iTunes, Spotify, iHeartRadio, or wherever you enjoy your favorite podcasts. Please be sure to subscribe to the program so you don't miss any of our future episodes. So friends, I'm John Stacy, and you've been listening to Regions Business Radio Houston on Business RadioX.
Regions Bank, member FDIC, equal housing lender. This information is general in nature and is not intended to be accounting, legal, tax, investment, or financial advice. Regions believes this information to be accurate when recorded, but it cannot ensure that it will remain up to date. Consult an appropriate professional concerning your specific situation. The information should not be construed as a recommendation of a specific course of action for any individual or business. All Regions products and services are subject to qualification requirements, terms, conditions, fees, and credit approval.